Okay guys, it's Saturday morning, so that means it's coffee with Scruff. Now it's a bit of a celebration one, this one, because 27th of October 2019, the Scruffy Trader was born. Or I rephrase that. Scruffy Trader was actually born in 1970. Long time ago, because I was old, boys and girls, I was old. But the Scruffy Trader YouTube channel, as you see it now, was born. I'd messed around with bits and pieces, but I pulled it together, and the channel that you're watching now started 27th of October 2019. And it's been a journey and a half. But journey is what I want to talk about today. So let's roll the intro and I'll tell you. Warm welcome, one and all. Now, what I'm going to do is I'm going to do a couple of things. Saturday morning, I do my markups and I prepare for the week coming. And why do I do it that way? Well, the markets are quiet. Joanne's normally off shopping, which she is. And the house is quiet. And I've got a bit of time to myself. It's a good time to reflect on the markets. Mark up my charts, because I only do it once a week. And answer whatever questions happens to be in my DMs or my emails. Now, there's another video out this morning about big picture trading. I did it earlier on as part of the trading clinic. Now, a lot of the trading clinic, because of the Popeyes of this world, I keep behind closed doors. And who knows, I might start bringing it public again. But go in the comments and you sharp see the people that stick it in all the time. And what they're really doing is showing their failures. They're kicking off probably because they fail and vent it out on somebody like me. Now, my hit rate is pretty good, but I'm going to tell you why it's good. But I'm also going to show you a strategy. Why? Well, why not? Because I can show you this strategy. It's a proven strategy. It worked quite well, but you're still going to fail. And then I'll explain why you're going to fail. So let's get a coffee and I'll show you that strategy, and then we'll go for a wander.
Well, we're waiting.
Okay, guys. Got the saber back. Need the lightsaber. Let's cut through this noise. And what noise are we talking about? Everybody wants a strategy. They think strategy is the king. If I've only got the strategy, I'm going to be rich. If I'm on a tick chart, I'm going to be rich because I can see everything that's going on. No, you can't. And if you go in the big picture video, I'll explain that. There are two constants on the chart. Your levels, because they're in the same place no matter where you put them, and the price itself, because it doesn't matter whether you're looking at a tick chart or a monthly chart, price is in the same place. How you get into the market is kind of your strategy, I guess, what you're looking at. But to me, the entry criteria, the fabled trigger, is 10% of the trade.
They've done studies, 60% of the time, it works every time.
That doesn't make sense.
It's what you do after it. And we'll touch on that a little bit later. But let me show you a strategy that you can work out, and I'll explain why, even though I'm going to show you something that is tested, can be used.
I'd buy that for $1.
You're still not going to make any money from it. That's the crux of this coffee with Scruff. So let's clean this down. Hello, Vader. How you doing, boy? Is that right, son? Is that right? Get Joanne's titties off the screen. Well, actually, some of you might actually want to see Joanne's titties on the screen.
Oh, here we go.
No. I've got a few videos like that, actually. Right. Is that what you think, fella? Little Darth Vader is having a bit of a thing. He's into the winker. He likes the winker's dark side. Yes, we're talking about the moon. No, we're not. Sorry, it's Saturday morning. Who gives it? Yes, her backside is impressive, son.
How does your missus put up with you? Must be my legendary prowess as a lover.
Right. Time frame. Don't bloody matter. Personally, the higher you go up in the charts, the better it becomes. The lower you go in the charts, the more noisy it becomes. These are things you've got to consider. You need 3 moving averages. First one. Here. 100. You can have a 1 underneath it. 200. With me so far? 100, 200. So what's the strategy? Why moving average? What are you talking about, big fella?
Bring on the dancing girls. Get rid of this idiot. Fuck you. Off.
It's criteria to enter the market. Now the way it works is very simple. They are your boundary of what's called no man's land. You do nothing when the price is between them. And it doesn't matter whether the 100's at the top, 100's at the bottom. Doesn't matter. It's just 2 lines that are spaced apart with a reasonable sort of distance. And 100 and a 200 will do that for you. You then want a 5 minute. And the 5 minute will waggle its way through, get into the middle. You do nothing. 0. Till it exits. So it'll waggle its way back up. And then you'll get a candle that will close on the other side of this as the 5 minute also crosses. So this said candle, this one, is your trigger. Get into the market straight away. No. You put a pending order in. Across the top of it. So now you got the crux of that. I'll just draw it a bit cleaner. And then we'll see what else is going on. Alright. So that's the idea. So you got a 100. And then you've got a 200 underneath. And then you've got a 5 that's working its way through till it closes on the other side. Simple so far, yes? This is as simple a system as it's going to get. You put a pending order here above the candle, and then eventually a candle's going to take it in. You trigger it in, where you go. Right, what's the next criteria? Well, it's very simple. You need to set out where your maximum stop is. And I'm stating maximum, all right, because you have 2 stops. You've got your thinking stop and your maximum stop. That is here. Directly below the entry candle, you put your stop on the other side of the moving averages. It's there for one reason. If you're not at the screen and you're wrong, that's as much pain as that's going to take.
Maximum power.
Alright? You're going to ask yourself a question. Can I afford it? If you can't afford it, half your position size, but leave that stop where it's at. Right. Market continues to rise. Like so. And this 5 minute moving average is going to run with it. And what you do is you hold that trade till that 5 minute comes all the way back into no man land. Okay. As soon as it closes inside there, trade is over. Game over. So what you've now got is an opportunity to catch trend following the 5 minute because it hugs the price. You've got an area on the chart for you to get out, no man's land. And if you're not at the screen and you're in bed or whatever, and it catastrophically goes against you, you've got to stop down here. Now there's certain criteria you can add into this, which is management. There can be areas where you pull the stop to break even. There can be trailing stops, so you're always locking profits in. There are loads of things that you can do. And it all comes under management. Now, strategy there, just like that, is simple. People sell that. And they sell it for lots and lots of money. But the bit that they miss is they don't tell you how to manage the trade. And that's the difference. So let's go down in the kitchen and we'll have a little bit chat about management.
It's coffee time! Coffee, 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 coffee! Cappuccino! Java, yes!
Okay guys, let's go get a cup of coffee and we'll see if we can put this to bed, shall we say. Just mind where, don't break me neck walking down the stairs. Okay, trying to hold the gimbal and a cup at the same time. So you just had a look at a little strategy there. The strategy is about as simple as it gets. It genuinely is. 2 moving averages, 100, 200, doesn't matter what they are, that could be anything. It's just they're quite common. 5 moving average. Soon as that 5 goes from one side to the other, on the outside, it's time to go. That's it. Stop on the other side and then you manage it. But management is the problem. So I'm going to drop the kettle on, I'm going to go to little boy's room and we'll continue this. Okay guys, so what are we talking about here? Because obviously I've given you a strategy, so that's going to make you rich, is it not? Is it? Well, most of you who've turned off at this point, that's exactly what's happening. Oh, I'm going to be rich, the big fellas gave me something. Woo-hoo. Well, I haven't. That's the point. What I've done is I've just showed you a criteria to enter a market. What I haven't shown you is how to make money from it.
What?
And that's the one thing that most people can't show you. It's very easy to show you a strategy. In fact, it's dead easy to show you a strategy because I've just shown you one. And it's no different, no better than anybody else. Tell you what, I think we'll stop in here today. Let me grab a seat. Let me grab a seat and put some light on the job.
I don't know where you get your delusions, laser brain.
Okay. Grab a little seat, shall we? Oh, it's nice to be in here. I quite like it in here, actually. It's quite a nice room, quite peaceful. The house is actually bigger than it looks, to be honest. It's a bit like a TARDIS. And I guess trading is a bit like a TARDIS as well. Why is that? Because there's so many components and so many different rooms to it. And for those of you who are not science fiction fans, the TARDIS is bigger on the inside than on the outside. Doctor Who reference, this thing.
Which box is larger?
That one.
Now which is larger?
That one.
But it looks smaller.
Well, that's because it's further away.
Exactly. If you could keep that exactly that distance away and have it here, the large one would fit inside the small one.
So, what does that mean? Well, it means you're looking narrow-viewed at the chart. So there's a strategy. Everybody looks for it. And I've just explained it a couple of times. But to the uninformed, they'll think that's the Holy Grail. That's it. I've got my strategy. I know exactly how I'm going to trade. Therefore, I'll put it on a 5-minute chart because obviously it's quicker. So therefore, I get more money.
How about no?
What a fucking idiot. And I know I swear a lot and I get annoyed because I do get annoyed. Because I prove day in, day out, simple is best. But simple has to be with something. And I don't mean like a simple person that's a bit, you know, and I look at some of the comments and I just think there's a bloody village missing an idiot here. But that's because they're looking for something that isn't there. They're looking for the Holy Grail. The Holy Grail is when you look in the mirror and you decide to yourself, I'm going to plan this out methodically. Yes, that's an entry criteria. But why can't I make money from it if that's sitting next to somebody who does? Somebody can follow what I do, and I can show you exactly what I do. But you would still fail if you're looking to gamble. Now, my system, the way that I work, is very simple. It's an older system, but like most things, the old ways are the best ways. There's nothing new in trading. It's high time frame trading on low time frame entries using an hourly bias. Now, your bias is not necessarily your dominant direction. And that's why you have to read a chart. You have to be able to read the upper structure of the chart and the lower structure of the chart and see where the synergy is. If you're going with it, your target by definition can be better. If you're against it, you've got to rein yourself in. It's that simple, but people don't. They swing at the fences all the time. Hey, I'm on a 3-to-1. Brilliant. Are you making any money? No, you're not, because you wouldn't be complaining if you were. So that system is absolute bollocks. It works perfect on paper, just like any other business structure works perfect on paper. But in the real world, it don't work, because the real world is not on paper. It's a living, breathing thing, and that's what the charts are. So you've got to understand something else rather than your strategy, and it's management. If you can't manage a trade and you manage it to a profit or a loss, you're finished in this game. You're finished before you start. You can go into the market without a stop. I often do. I'll go in without a stop if I'm on front of the screen. Why? And I've just shown it on that sort of chart. I have a thinking stop and a hard stop. I always know where my hard stop is, and I refer to it as the box of pain. It's how much pain I'm willing to add into the market. But I always know where it is, and the guys in the squad know exactly where I put it because I show them. Do I expect that to be hit? No, I don't. I never expect it to be hit, which is why I have a thinking stop in the middle. In that strategy there, it showed you one. As soon as that comes back into no man's land, that's your thinking stop. That is time to get out because the chart has told you you're wrong. I have this set up in the way that I trade. I know where my pain points are. So I can easily go into market without a stop if I'm in front of the screen. And if I see the market moving into the first set of criteria, I just press the button and kill it. If I haven't got the strength to kill it and I'm not in front of the screen, the computer will do it for me, because I'll have that hard stop in at some point in the trade. If I'm going to be in it for a couple of minutes, it doesn't matter. But if I'm going to be in it for an hour, 2 hours, then yeah, but I've got time to place it in place, because I don't believe in tight stops, or not tight stops in the sense of 2 or 3 pips. I think that's ludicrous. I don't believe in mega wide stops either. There's a difference between a wide stop, a tight stop, and a sensible stop. I use a sensible stop to allow the trade to breathe, allow me to get a better position, and then use that better position with less money on the table. That's the big thing. I put less on the table than what somebody else sitting next to me does, but I have a bigger upside. Now that's a mind boggler, and it's something that DCA is all about. And once you understand it, and you know where your point of entry is, your point of exit is, and you can DCA correctly in the middle of it, you're fine. You try and do Martindale where you're doubling up, cripple you, because that's gambling again. So everything is management. You've then got to look at how far that market can potentially move based on higher time frames. 5 minute will never show you this. You know, all these fabled, when you hear people going, oh, I'm looking at a market structure. Oh, I'm looking at liquidity sweeps. Where? Where are you looking at them? You're looking at them on 5 minute charts. It means nothing. Zero, zip, nada. Why? Because the people who actually move these markets would never look at that as a point of interest. They look further in the charts. So what you want to be doing is, instead of zooming into the chart, you zoom out of the chart. You want to see the big picture. Think of your of atlases. If you've never been to Manchester in your life, you'll get an atlas, open up the page, and you look at the country and you see exactly where Manchester is. So now you know what the direction is you're going in. Right, when you get to Manchester, you might know where a certain village inside of Manchester is. So you would open up a local atlas and look to see where the village is. And then again, you would drive to the village. And then when you're in the village, you might know where a certain road is. So you would look at a local A to Z to see where that is. And in you go. So you're going down a series of events. I know the world's lazy now, and you've got GPS satellite navigation. But when I was a kid, we never had this. We had to learn to read road maps. Now, when I started trading, we certainly didn't have what you lot got today. I had to read a chart to understand it. And I'm telling you straight, there is no magical indicators, none. The only indicator you really need is the price. Moving averages is a definition of that price over the last set of periods. That'll help you. Look at a Bollinger Band, it'll show you the strength and movement of a market. Look at an RSI, it'll show you the momentum of a market, or a stochastic. But will it tell you how to time a market? No. Because there's one thing they can't tell you. None of them. And even the price can't tell you this either. What's going to happen in the next hour? Can't tell you. Because it's the future. And until you kind of get to understand that and see the realization of that, you're destined to fail. But the main reason you fail is there's a system up there that's pretty robust. Two moving averages, 100, 200, prices in the middle, you do nothing, you wait till it's on the outside and the 5-minute moving average is closed beyond it. Fine, there's your entry criteria. Your exit criteria can be a set profit target, either into the next level or 1-on-1 based on your stop, 1-and-2 based on the stop, whatever you like. You'll have an exit strategy. Closing the trade is when that 5 goes back between them lines. That's your time to get out. Simple. The lower you go into the charts, moving averages become whipsaw. They're all over the place. And you're looking for the mega whale, which happens very few times. So you're going to get cut out, cut out, cut out, cut out, and you're going to be demoralized. But if you go higher in the chart, apply the same criteria, you'll get less signals, but stronger signals, target appropriately. And if you want 20 pips a day or something like that, that'll probably give it to you with very little pain. And the only thing you have to do is manage it. Now you can manage it on a 4-hour chart. Just, the hourly is crossed, little alert on. Just going to keep an eye on it every 4 hours and make a decision. And all you need to do is have another alert for when that 5 crosses whichever moving average that it went breaking through, and that'll tell you to get out. Simple stuff, guys, simple stuff. But so many can't get it. And I don't think they ever will. And that's why the failure rates are high. Because the next part of this, which is kind of what I'll finish off on, and if you like trading in the real world, and I do mean real world, I'll be brutal with you and I'll tell you the way I see it. And if you want to see it more, come in the squad, but definitely click the subscribe button, and it motivates me to do more. And drop your comments below. I try and answer every single one of them, and I certainly answer every email and DM that comes in, every single one of them. But what I want to sort of touch on is why the main failure. I've gone through management and the desire to tinker things and one thing and another, and tinkering is the word.
Who'd be stupid enough to do that?
Justify, stupid.
Because I see it all the time in the squad, and I only keep really what I do for the squad. It'll probably never be public. But what I am doing at the moment in time, I'm reevaluating the website to sort of help guys who can't get into the squad overseas, because it is location based, because YouTube own it. So I'm toying with putting the modules on the website. Again, it depends on what you guys see in the comments. If you want it, I'll do it, and if not, well, I won't. Simple as that. But what I'll say is, when I show something, why do you change it? Why do you have this irrepressible need? Right, there's a system, right, I'll guarantee it'll go. Well, what if I put it on a 20 and a 50 moving average? Doesn't matter. If it floats your boat, get on with it. What if I use an 8 EMA instead of a 5? Fine, get on with it. There's always a desire to change something. And you're chopping and changing. And it's the same with strategies. You can have a strategy, it'll work, then it'll fail. So you'll jump to the next strategy. It'll work and it'll fail. Then you'll jump to the next strategy. It'll work and then it'll fail. And then you're back at the top again. You've gone through a treadmill of terror. And that treadmill of terror is just having you spin wheels, but if you're stuck with the same strategy to start with. I know what my entry criteria is. I know roughly what the targeting system is because I know how to read a chart. You'll be fine. But you don't. You start changing it and adding things into it to look for the holy grail. And then before you know it, 6 months is gone and you've lost a fortune. Then you cry because it's always somebody else's fault. This kind of ringing true? When really you should look at a strategy that you're comfortable with, work on it, and then work on you. Look in the mirror. Ask yourself, how many times do you trade? The way I trade, it offers me up on each one of the charts that I look at, once, twice a day, a decent setup on every single chart that I look at. Now, all I do is I narrow the odds by looking at the best of the bunch and then still look for that 1 or 2 trades. And that's it. That's my management style. I don't overtrade. I trade very conservatively compared to the size of the account. And that's the other thing. People look at the way I trade and they compare my account to theirs. Whereas mine's probably 5-10 times bigger than theirs. So naturally my position size can be bigger. And even if I'm doing the small account, which I probably focus more on, to be honest. I like that. It's doing really well. And I'm trading peanuts with it. But the difference is I trade it once a day, just once. The guys that lose are trying to trade it 10 and 12 times a day and then wonder why they get caught. Just a thought. Less is more. Well, I'm going to enjoy my coffee, going to enjoy Saturday. Don't know what I'm watching tonight. It's coming up to Halloween. I think we'll watch a nice Halloween film. There must be something with some decent pumpkins in it. Anyway, guys, as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.